Hey everyone, Phil Hodgson here. It is April 28, 2023, and this is the International Tax Lunch. And this is also the kickoff of first of 11 episodes of the story of Form 5471, our favorite form. And I have ongoing debates with people about whether Form 5471 is the worst tax form the IRS publishes or Form 3520. Make your votes known. Um, I'm not going to be taking any questions in this session, but if you want to, my email address is on the last slide. Shoot me an email with questions. I'll answer as best I can with comments about what you would like to see in upcoming episodes about the Form 5471 and whatever else you think. Hey, this presentation is full of what, or, add this, subtract that. Anyway, let's kick it off. Form 5471, the next 11 months of this. And let's see if I can make the slides move forward. There we go. All right, these are the sessions that are lined up, all in CalCPA. So we are going to do today an overview of part one, the filer. So the first basic question you ask yourself when a tax return project lands on your desk is, do I even have to file Form 5471 or not? And so this is an overview of what we're going to be talking about in 2, 3, and 4, the next 3 months after that. Then there will be a pod of 3 episodes talking about the kind of income that flows out of foreign corporations and onto the income tax return of a U.S. taxpayer, subpart F income, global intangible low taxed income. And you will never hear me say the acronym for that because I'm not a fan of government imposed propaganda and brainwashing, but I will say no more about that. And finally, distributions from controlled foreign corporations. Technically, there might be another kind of income from foreign corporations, namely you sell the shares. That small thing, maybe I'll add that into distributions, maybe not, depending on time availability. And then finally, damage control. If the government is making you pay tax on a foreign corporation's income, will they give you foreign tax credit to offset the U.S. tax liability, or is there going to be double taxation? So we'll talk about foreign tax credit. Fixing the mess with restructuring, check the box elections, reorgs, all that fun stuff will be a session. The Section 962 election, always a perpetual favorite. Make yourself be taxed as if you are a C corporation for this foreign corporation. And then finally, we'll wrap up the 11 episode series with sort of a comparison of, if not a CFC kind of structure, what else can I do if I want to do business abroad? So that's what we got to come forward to. These are the forms I'm using for this episode. Sometime late in the year, they'll publish a new form and we'll update it. But we're using the December 22 Form 5471 and the instructions from January 2023. And in this show particular, episode 1, as well as the all 11, I'm kind of trying to take a Pareto principle approach. What are the practical, important, common things you need to know? Not all the side detours and nerd-like exercises and exceptions and exceptions and exceptions that you hear a lot. Just what's going to make it easier for you to prepare a tax return and a 5471? What should you be looking out for? And that's what we're going to do. The table of contents, I like to throw that in always, so you have something to refer to for later on the PDFs. And let's do a transition into the introduction to episode 1. So here we are. We're talking about 3 upcoming episodes. This pink area is who is the filer. So insert your name here if you are a filer, or don't even bother with Form 5471 if you are not a filer. So that's episode 2, and we'll give a 15-minute overview of what goes on there. Episode 3 is the 9 categories. And yeah, I know there are 5, and some people say they're 5 and some they're 9. But if you read the instructions, the IRS in the instructions says there's a thing called category 5, and there's a thing called category 5A, 5B, and 5C. So they call them categories, not subcategories. So I'm going to follow the instructions and the way they refer to each of these little check boxes and call them categories. And this for such a little part of the form is a big thing. I mean, so in fact, some of it is going to go deeper. Oops, sorry. And some of the information that we discuss here is going to go bleed over into category 4, which is the filing exceptions. I call it that, but really, truly, what this translates to is, can I do less work? Like, can I not file? Can I file fewer schedules? You know, can I make somebody else do the work for me? So I've pointed to item H on the front page of Form 5471, which is where you file a joint Form 5471 with somebody else, and they provide all of the information that's required of you and put your name there, and you bolt a little statement to your tax return telling the government that somebody else did your work for you. They file on time, they file correctly, and they do everything right. And hey, presto, you don't have any problems at all unless they screw it up. In which case, if they're late or they don't provide the information, who pays the penalty? Probably you. So, use this one with care. Right. So that's the introduction. So if you want to take a look at it, the whole first 4 sessions, this one and the following 3, is about the first 2 pages of Form 5471. The other parts of the page 1 and then page 2 are identifying shareholders, which, as you'll see here, we're going to talk a lot about. And I think that's the crux of the whole problem. So let's talk about who is a Form 5471 filer. And there are, to my mind, 2 big essentials. There's a bunch of little bullet points you have to hit, but there are 2 that if you don't have them, you're safe. And the 2 things that you need are, you need a United States person who is a shareholder and who owned enough shares. And we're going to talk about what does all of that mean, because each of these are defined terms. And you need a foreign corporation, because if you don't have a shareholder, Form 5471 is all about shareholders of foreign corporations. You don't have to file Form 5471. Conversely, if a U.S. person owns an ownership stake in a foreign entity, but it ain't a corporation, again, you don't have a Form 5471 problem. And here's what it means. So for a United States person who is a shareholder, so you got a United States person, we'll just hand wave by on what that means here. We'll go into it deeper in the next episode. Who owns or owned, because category 2 and category 3 are tagged with transactions, whereas the other categories are tagged to ownership. And then this enough thing. So what does that mean? And also enough at a moment in time that's specified by the code or the regs. And then the second element is a foreign corporation. What's the meaning of foreign? What's the meaning of corporation? And if we look at the whole scenario, what are these 2 things doing? What's the crux? What's the hard part of the hard part? And it's right here. Ownership. What does it mean to own stock in a foreign corporation? And that's where we're going to spend most of our time here. I'm going to give you high-level details on the other elements, but here we're going to talk a lot about the meaning of ownership, and especially in episode 2, we'll talk almost entirely about the attribution rules. Foreign corporation, that's pretty straightforward. So let's look at that straightforward thing, the foreign corporation. What does it mean, and how do you know that you have a foreign corporation? Well, first we define foreign, and foreign is defined as anything that's not domestic. And so the short answer is demand a copy of the Articles of Incorporation or Certificate of Incorporation or Certificate of Organization or whatever it's called for this entity that you, in theory, have to do some compliance for, and take a look at it. And if it says the names of one of the 50 states or the District of Columbia, it's a domestic entity, therefore it can't be a foreign entity, and you don't have a 5471 problem. And then you have the question of what's a corporation? Well, in the context of a foreign entity, there's 2 categories of entity types that can be corporations, or technically associations taxable as a corporation, in the jargony phrase of the Internal Revenue Code. One of them is this thing called per se corporations. So the government has made a list by country that says, if you have one of these, it's always a corporation, the end, goodbye. And the easiest place to look for that list is in the instructions to Form 8832. It's in the regs, but easier to pull up the instructions. The second category of foreign entity that you will come across is, if it's not a per se corporation, it might be a foreign eligible entity. And what this means is it has a default classification as far as the Treasury regulations are concerned, but you will have the ability to make a check the box election to have it treated for US tax purposes as something else. So it's eligible for the check the box election. And the default classification for being classified as a corporation is that all of the owners of this entity have limited liability. So when you find, a company, a limited company formed in the Bahamas, it's not a per se corporation. Are all of the shareholders of that under Bahamas law do they have limited liability? Answer is yes. Okay. Default classification is a corporation. So you don't have to make a check the box election. So that's the process you're going to go through to determine whether you have a foreign corporation for Form 5471 purposes. So here's my little handy dandy checklist. So first we're going to look at the foreign aspect of it, because just a glance at the articles will tell you foreign or domestic. And then if foreign, you're going to have to go through that two-step thing. Is it a per se corporation? Is it a foreign eligible entity? And when you look at the check the box elections, the check the box regulations, what do they say for the classification of this entity? And then finally, and I've had this happen before, somebody says, "No, I think 20 years ago we made the check the box election for this thing, but I can't find any paperwork." Yeah. So, at least put on your checklist, ask if anybody accidentally or on purpose made a check the box election for this foreign entity. So at least whether you're filing it with the correct classification. All right. The second element, remember there are two essential elements that I identified. One was foreign corporation. We're done with that because that's pretty mechanical. Now we're getting into the meat here. Now, I said that stock ownership is essential for all of these. And I know what your brain is saying. Yeah, but, what about U.S. persons who are officers and directors? Well, their filing obligation is triggered when somebody acquires stock and they didn't own it before, and now they did. Or they own some and now they own more. So stock ownership is there. So we're going to have to dive into the esoteric meaning of the word acquire. But stock ownership by a U.S. person is essential. And then all of the rest of them, you can see category 3, same idea. They didn't own any stock and then they did, or they owned stock and they disposed of enough to make it a filing requirement. So stock ownership is always going to be a question that you need to address for every category of filer. So there is my exhortation to believe me when I tell you that stock ownership is your problem here. Well, the practical problem of, banging on people and saying, "I need numbers," and they don't give you numbers. And then you're running up against a filing deadline, tearing your hair out. That's another problem, but that's a person problem, not a technical problem. All right, let's talk about the U.S. person question. What does that mean? United States person here is the default classification in the Internal Revenue Code, which is, if you know this, because if you know how to file a Form 1040 and who gets a 1040 or a 1065 or a 1041 or an 1120, you know what the meaning of the United States person is. For our purposes, for Form 5471, there are 3 modifications for possessions and territories that I'm not going to go into, because that certainly is way outside the Pareto principle threshold, and we're going to filter that right out. So we have a foreign corporation we have some stock ownership by a United States person at the right moment in time that's specified by the code and the regs. And the right moment in time is variously, littered about. It's like at any time in the taxable year, or they will say on the last day of the corporation's taxable year, or they might say on the last day that the foreign corporation is controlled foreign corporation. See, like a foreign corporation can be a controlled foreign corporation, and then maybe some of the U.S. shareholders exit. So now it's majority owned by non-U.S. people. All of a sudden, it ceases to be a controlled foreign corporation. So the last day on which there were enough U.S. shareholders to make it a controlled foreign corporation. But anyway, I'm not going to bother here because this is a high-level overview. But later we will talk about this. And the instructions for Form 5471 are very good at telling you category by category the moment in time at which you need to ascertain the correct or required stock ownership level. So, and I've got to say, of all the things that the IRS does, I am never cease to be impressed by how well they do translating the absolute gobbledygook of the Internal Revenue Code and the regulations into something semi-understandable on a form, so you can walk your way through the form and get to the right answer consistent with what the law requires. And little side note, if ever you are absolutely confused about what the law means, if you work your way step by step through a form, it will help you understand what you're reading when you're glaring at the code and cursing the congressman that wrote it. And specifically, I want to give, thumbs up to the IRS for the latest version of the instructions to Form 5471. Last year's version was kind of a mishmash where the filing instructions said, here are the categories of filers, and the exceptions were all over the map. Now they've reorganized what is a category 1, 2, 3, 4, 5 filer, and they put all the requirements there, and they put the exceptions for filing under each of these, and it's extremely well organized. It can't, by definition, be complete because they don't have enough space on the page, but it's really good to help you understand what works. So good on you. Whoever wrote that, I'm impressed. So let's move on to the crux of the whole climb here, the meaning of ownership. Here's my little handy-dandy picture, and then there's some words to follow. Constructive means somebody else owns the shares, like here, Dad owns 100% of Father Co. And because you're related to Dad, you're his child, you are the constructive owner of Dad's shares in Father Co. That's constructive. Indirect ownership, so that thing that looks like a capital E with an arrow on it. So we're looking at a parent subsidiary stack, and you can see that there's a direct chain of ownership from you, who are blue, all the way down to the subsidiary. And so there's a kind of economic ownership arrangement, and you look at it and you say, if Subsidiary Limited burped out some money with a dividend or liquidating distribution or something like that, that would benefit me directly or indirectly. At least parent company would have a bucket of money, which makes me better off. And then maybe parent company can do a dividend up to me, and I have it in my pocket, and I can go walk outside and buy a hamburger. So there's an economic arrangement in an indirect relationship and indirect shareholding that is not there with FatherCo, because you look at FatherCo Limited, what happens if FatherCo Limited issues a dividend? Well, Dad gets it, you don't. So there's no economic relationship there. And finally, direct means your name is on the stock certificate or the share registry. So if you want to think about it, indirect means there's an economic arrangement and an economic relationship between you and that foreign corporation, however far down the tier it is, and whatever is in the middle, whether it's a partnership or corporation or whatever. There's an economic relationship and there's a control relationship. Whereas with constructive ownership, there's only a control relationship where the government assumes that because your father loves you and would do anything you want, your father is going to functionally treat as your agent, and therefore maybe the government wants to take a look at what's happening over there in FatherCo and tag you with some taxable income. So here are the words. I want to point out that sometimes in the code or the regs, you will see that they use the word constructive and indirect indiscriminately. And specifically, they'll tend to use the word constructive as including indirect. But I want you to use crisp, clear, precise language. Refer to indirect as a holding structure and indirect ownership that way. Use constructive as there's no ownership relationship, but there's a familial relationship. And keep it straight in your mind, and everything will be better. All right, percentage ownership. There's a question. Sometimes your percentage is either by voter value, sometimes it's by voting power only, sometimes it's by vote value only. The instructions are going to tell you. We'll get deeper into this in future episodes, but just so you're going to have a percentage, and the question is percentage of what, and this is what it is: vote or value, vote or value. And the hard part of this is, if you want to think about it, we talked about direct, indirect, and constructive, is not about the direct ownership. I mean, the only way you can go off the rails with direct ownership is if there's a nominee hiding the true shareholder behind and you don't know that, or, and I've seen that, or the corporation has never updated its records to accurately reflect who the real shareholders are. And I've seen that too, and I'm sure you have. So it's really the indirect and the constructive ownership, the attribution rules. Attribution is the verb. The result, the adjective, is indirect ownership or constructive ownership. And the reason it's kind of a pain in the neck is because for one form, they have three different sets of attribution rules at play. And here they are. And we're going to start to see in future episodes why this is such a bad thing. And you can keep it all straight, but you have to be methodical. For instance, in normal day-to-day attribution, we yap back and forth amongst ourselves, and we assume that if a sibling owns shares, it's never a problem. Well, guess what? For category 2 and 3, sibling attribution is a thing. And there's another one, which is big. Normally, for attribution rules, it doesn't matter whether a family member is a resident or a non-resident person. Well, guess what? For categories 1 and 5, it is a thing. You have to take that into account. So you have to be careful as you're going through this with the attribution rules, that you know which rule set you're playing with. So in summary, this just a high level what we're going to cover in episode 2, who is a 5471 filer. Easy part is, do you have a foreign corporation? Yeah, that's all paperwork and pointing at documents. The hard part is identifying all the shareholders. The hard part is the attribution rules. And why the hard part is hard is because there are 3 sets of attribution rules. So don't let your brain go to sleep. And that's sort of what we're going to cover in the who is the filer. And it will either be a shareholder or an officer and director or both. But we'll talk about that in episode 2. Now, the next thing we'll be talking about, which is episode 3, is the 9 filing categories. So here we go, the introduction to it. Again, this is what we're looking at. You will be checking one or more of these, frequently more than one. And you need to figure this out with some certainty, because that drives what information is required of you and what you need to bolt on to the Form 5471, because the different schedules are driven by what category you're in. And if you miss a category and you don't attach the schedules, our friends at the service will send you a polite little request for $10,000. At least they would up until a few weeks ago, when the tax court said that they don't have the power to assess the Form 5471 penalty. Yay. Thank you, Ed Robbins, for arguing that in the tax court. So we'll see what the government says on that. So what do you need to know for this? Here are the defined terms out of the code, the things that you're going to have to find out in order to answer the question, and check the correct boxes for the person whose tax return you're preparing. Are they a U.S. person? Is this the first year they're a U.S. person? Because someone who is a non-resident immigrates to the United States holding a sufficient amount of stock in the foreign corporation is a Category 3 filer. You have to figure out what kind of entity you have. So you see there's this thing called a Section 965 specified foreign corporation. Foreign corporation we've defined before. There's this thing called a controlled foreign corporation. All of these, you need to know what precisely do you have at play when you look at this entity. You have to figure out is this person that you're working with a quotes United States shareholder, close quotes? Are they an officer or director? Then you have to look at stock acquisition or disposition. What does that mean? And did it happen? And then finally, there are a bunch of fiddly little requirements for categories 1B, 1C, 5B, 5C. These come out of RevProc 2019-40, which is what the government did to sort of soften the blow when Congress at the end of 2017 allowed downward attribution for categories 1 and 5. So they sort of said, well, in some cases, the downward attribution rules make you a U.S. shareholder when you didn't expect to be, or make a foreign corporation, a controlled foreign corporation, when you didn't expect it to happen, and you have no ability to get data. Therefore, we're going to make your burden a little bit easier. And so those fiddly little definitions relate to that. And just to give you a summary slide with all of the definitions, you see definition, my description. So that's the connecting tissue between the two bones, and defined term. This is what you'll be aiming at to define whether your taxpayer is a category whatever for 5471 purposes. So how do I do it? So this is my process. You can do it your way. But what I do is, first, I want to know about stock ownership, down to the gruesome detail levels. Is everybody identified out? By gruesome details, I mean identified out until I see human beings or publicly traded companies. And in my practice, it's always human beings. It's rarely going to be a publicly traded company. And then I'm going for knockout punches. So the first one I'm going to look at is categories 2 and 3. Categories 2 and 3 are triggered by transactions in stock in the taxable year. So I check to see if a transaction occurred. If yes, then I'm going to go look at the rest of the rules for categories 2 and 3 and decide whether I have to file those or not. And then after I've decided person is in, then I'm going to look for exceptions. My next knockout, and that's just because it's easy to identify transactions in the year. That way I can get these two things out of the way fast. The next one I can get out of the way fast is category 1. Section 965 of the code, this is when the government completely upended the status quo for international tax for controlled foreign corporations and made all of your accumulated earnings and profits in a CFC immediately taxable. And they repurposed category 1 to track all of this Section 935 taxation, at least until it all washes out. And so this is becoming less and less of a concern. There are some people who have some remedial work, let's just say, that it will become a concern. But mostly for other people, it's going to be if in 2017, 2018 timeframe, you reported the Section 965 transition tax correctly and you put yourself on the payment plan, you've got some continuing filing obligations until you've washed all the Section 965 stuff out. So I'm going to look at that. That's easy to, and 95% of the time, it's not a problem. Then I'm going to look at category 4. Is there control? That's pretty straightforward. And then I'm going to look at category 5. So there we go. So what I've done is transactions, and then 3, 4, and 5 are all stock ownership is the triggering fact. The easiest stock ownership one to get rid of is category 1, and then I deal with the other 2. So let's talk about the details of category 2 and 3 and how do you figure out if they apply. So you look at 5471 Part one, Schedules A and B have some information about shareholders. For instance, Schedule A has the total shares issued and outstanding. Um, but you're going to be looking there particularly because you want to see if there's any change from the beginning of the year to the end of the year, which flags you that stock issuance happened, a reorg happened, a redemption happened, something like that, because this is going to be a category 3 problem. And then, assuming that the stock issued and outstanding at the beginning of the year and the end of the year is the same, you're going to be diving in and you're going to be looking at, did the shareholders, sell shares, buy shares, exchange, do something with the rate already outstanding stock? Was there an acquisition? Was there disposition? And then, did some, I shouldn't say terminate, that last bullet point with terminate U.S. resident status. Now, I guess it matters because you might suddenly not have a CFC, so that's going to trigger it. But really, the category 3 filing requirement calls out someone who becomes a U.S. resident and already owns enough stock in the calendar year. The meaning of enough. So here's the way to think of it. U.S. shareholders have you have to have a minimum of 10% or more of the stock by voter value and all that stuff in order to really matter for U.S. tax purposes. So these enough categories are tagged to that 10% threshold. So the enough is that final acquisition of stock that puts you at 10% or more. So if you bought 1% of stock per month from the corporation, that 10th month when you went from 9 to 10, bang, that's the acquisition that has to be reported, not the previous 9 months. And then once you've attained that threshold, it's every incremental 10 percentage points above that. So if you hit 10% when you acquire a bunch more stock, let's say 1% a month, and you hit 20%, bang, another reporting requirement. Or you can see, like, let's say that your initial issuance, formation of the corporation, you got 12% of the stock. Later, you acquired 10% more and you hit 22%, then you have another filing obligation. So it goes up in 10 percentage point increments. The disposition, same kind of thing. You can see how it ties out to U.S. shareholder status. They're saying for category 3 purposes, you have a disposition for that transaction that pushes you below the 10% threshold. Hey, presto, you're not a U.S. shareholder anymore. So that's kind of an interesting moment for the government to know it happened. So that's kind of my theory about why they care about the disposition on the category 3 side. And then we look at the interesting and partially unsolved question of reorgs and redemptions and all of that fun stuff. Because and I know that these things can be dilutive, right? You're sitting there as a 50% shareholder, the corporation admits a new shareholder, and all of a sudden you're down to 20% of the big pie. Well, did you dispose of stock? No, you still have the same number of shares. Did your percentage go down? Yeah. Or what about if one of your other shareholders' shares were redeemed, but you stay put, and instead of being a 10% shareholder before the other person was redeemed out, now all of a sudden you own 30%. Did you acquire stock? No. Did you move up in more than 10% by increment in the voter value of the corporation? Yeah. Okay, so it's a kind of interesting thing. Category 3 explicitly calls these things out and says if you're a 10% or more shareholder when a reorg happens, and they're kind of hand wavy about the definition of reorg, so I would say be conservative and over report, and for that kind of situation, you are a category 3 filer. But there's dead silence about this on category 2. So if you're a U.S. share person who's an officer or director, who the hell knows? And the question is, are you going to be careful, or are you going to do what the law says? And if the law is silent, it's not required. If the law requires it, it's required. I would pick the latter. If they don't explicitly tell you to do it or explicitly say it's required, it ain't required. And then finally, there's some weird acquisitions. They're not really acquisitions, but they kind of look like it if you glare at them with the sun setting just so and the light shining just right. Um, the requirement which is called out in the code and the regs, that someone who is not a resident alien and becomes a resident alien during the year and they have enough stock, that's a trigger for category 3. It's not for 2, but it is for 3. And so you're going to be filing category 3 in that. It's kind of like an acquisition. The other one, which I've seen, I don't know how many times, you have a US citizen go, lives abroad, finds somebody to marry, marries that person owns 100% of the stock of a foreign corporation already. From the day before the marriage until the date of the marriage, on the day before, the US citizen owned 0% of that foreign corporation, directly, indirectly, or constructively. As of the date of the marriage, that US citizen's spouse constructively owns 100% of the stock of that foreign corporation, because spousal attribution. Therefore, you have someone who, quotes, acquired simply by being married 100% of the stock of a foreign corporation, and technically there is a category 3 filing requirement. So little anomalies like that. You can take an extreme. What if you have somebody who yesterday wasn't born and today is born? Did they suddenly acquire, in air quotes, all of the stock owned by their parents? I think that's a bit extreme, and I'm not going to go to category 3 filing in that situation. But how many angels can dance on the head of a pin, huh? All right. Step 2. Now we're going to the question of, all right, let's divide. Once you've decided a transaction occurs that triggers a category 2 or category 3 filing, now you just have to bucket yourself. Am I an officer or director? In which case, I'm a category 2 person and I follow that track. And if I'm not, I'm a shareholder and I follow that. Now, the critical thing for officer and director is there's no definition of what an officer or director is. And way back when I was a young pup lawyer, I worked at a gigantic bank with 40,000 employees, and I was a vice president. And I think the joke was, in the bank, there were about 12,000 vice presidents. And I only got the title vice president because I had a law degree and no other reason. So the question is, was I an officer or director of that big multinational bank for category 2 purposes? If, God forbid, somebody bought 10% of that stock? Probably not. And the problem is there's no guidance whatsoever in the regs or the code. So I think you're going to have to play it safe and play it sane. I would say anybody who is at a C level, CEO, CFO, that kind of thing, and obviously on the board of directors, you got a problem. Anybody else, I think you just have to look at their functional power over the entity. If they have no title, but functionally they have the power to do whatever they want, technically you could get away with, I'm not an officer or director because I wasn't appointed as such by the board. But in reality, maybe that's not so helpful. So this is going to be a little bit loosey-goosey. My recommendation to clients, when at all possible, avoid the status of officer director unless you know who all the shareholders are. And so you can absolutely track what's happening to the shares of this corporation, so you can discharge your category 2 filing requirement if necessary. And for everybody else, you have a transaction, you're not an officer or director, you're a category 3 filer. Finally, there are going to be a bunch of category 3 and category 2 filing exceptions. We'll talk about those in episode 4, where we try to do as little work as possible. And off we go. So here again, summarizing, I try to sort of collect everything in one place. The summary of what kind of transaction to look for, what kind of taxpayer you have, and what kind of filing category you'd be looking for. Because I just want to know where the landmines are so I don't go over in that field, or if I do go over in that field, I've got a mine detector. So that's the way I'm approaching this. Having done with 2 and 3, let's move on to category 1. Category 1 is all about, as I said, the Section 965 transition tax. And here, remember I said my method of operating, the sequence that I work through is first I figure out, is there a filing requirement imposed? Then I say, is there an exception to the filing requirement? I don't jump straight to the exception and then work my way backwards to the filing requirement. But in category 1, there's such an obvious and easy knockout that I look at this one first. So you're looking at schedules J and P. So if you've done, grab last year's 5471. And if you have Section 965 earnings and profits in these two schedules, you continue to have a filing requirement under category 1 for this entity. If all of those earnings and profits are washed out and there's nothing left on J and P, then you're done. You don't have to worry about category 1 ever again. So do that first. If you see earnings and profits, go have a cup of coffee. If not, you work your way down and you say, okay, what are my filing requirements? And then are there any exceptions? Am I a shareholder? Again, ownership. Is this a Section 965 specified foreign corporation? And I'll talk about what that means. If yes, continue. If not, go have a cup of coffee. And finally, once you've decided, yeah, I'm a shareholder, yeah, this is Section 965 specified foreign corporation, you'll have to bucket yourself in 1A, 1B, or 1C. And that's a episode 4 problem that we'll talk about. And then finally, exceptions. So, a specified foreign corporation, what is this? It's either a controlled foreign corporation or a foreign corporation with a U.S. corporation as a shareholder. And the thing to remember about this, just to keep it simple in your head, is that the first definition is a Section 965 specified foreign corporation is exactly the same as a controlled foreign corporation, but there's a little bit extra. And therefore, whatever your brain tells you has to be done for a controlled foreign corporation is almost certainly going to have to be done for a Section 965 specified foreign corporation. So the two are kind of like twinsies, maybe not identical, but pretty close. And I've got a big blob there, and I'll repeat it a couple times. The code, the regulations, and the instructions are pretty good at keeping this distinction and saying Section 965 specified foreign corporation, but the code in particular screws us up because they use the same phrase, specified foreign corporation, in Section 898 when you're talking about taxable years of foreign corporations. And so if you just use the phrase specified foreign corporation, you probably know what you're talking about, whether you're talking about Section 898 and you're trying to solve a taxable year problem, or you're talking about Section 965 and the transition tax. But why not banish that ambiguity and be clear and always refer to this as a Section 965 specified foreign corporation? That's just my exhortation to be a hard ass. So, we will talk about category 5 at the end, and you'll see, attribution rules, the same rules that apply for category 5 are going to apply for category 1. But let's move on now to the very high level. How do we even know if category 4 applies? And do I have to check the box for this taxpayer on item B? And the triage sequence is you're going to look at Section 6038E2. So where the code says, if you, quotes, control, close quotes, a foreign corporation, then you are a category 4 filer. And what does control mean? It means that you own, and I put that in quotes because it's expansive, direct, indirect, constructive, more than 50% of the stock of a foreign corporation. Note it doesn't say controlled foreign corporation, it just says foreign corporation. So you're going to dig out your stock analysis that you did and your work papers. So you're going to look at each individual taxpayer and you're going to say, did this person own more than 50%? of the stock of a foreign corporation. And you can certainly have multiple people have control of a foreign corporation. So, easy example, husband and wife. Wife forms a foreign corporation to do business somewhere outside the United States, both U.S. citizens. Wife directly owns 100% of the stock of the foreign corporation. Wife controls the corporation. Husband is married to wife. Husband constructively owns all of the shares of that wife owns. Therefore, husband also is in control of the foreign corporation and is always a category 4 filing person. So it seems weird and perverse that you can have multiple greater than 50% shareholders of a foreign corporation, but that's what's happening. And later you dig into the exceptions and you find ways to say, well, this is dumb. Why is husband going to file as a category 4 filer? And you find ways to make the wife, who is a true shareholder, do all that filing. Anyway, so it looks worse than it appears. You can reduce the work later. Then finally, you're going to be looking at the filing exceptions for category 4. As I said, it seems kind of dumb to make the husband file all of the category 4 stuff if he's just constructive owner of the shares. And indeed, you are right. It is dumb. All right. Finally, onward to category 5. Category 5's triage is very similar, except instead of control being the critical element, the two things that you'll see, and this comes from section 6038E4, and you're going to see a lot of section 6038E4 in future episodes. It says a category, section 6038E4 says, you know what? Hey, IRS, Congress speaking here. If there's some more information that you want from a U.S. shareholder of a controlled foreign corporation, go for it. Ask them anything they want. And that's the statutory authority for which IRS relies to impose the category 5 filing requirement. So it's there. So you are a United States shareholder, and the corporation is a controlled foreign corporation. So those are the two critical elements there. If the answer to both of those is yes, you've got a category 5 problem. I hope you can find an exception. If the answer to either of those is no, then halt, you don't have a category 5 filing problem. And again, after you've decided you're in and you've got a category 5 problem, you're going to have to drop yourself into one of these buckets, 5A, 5B, 5C, which were created by RevProc 2019-40, not named there, but that they were functionally created there. And then you look for filing exceptions. So that's the sequence for each of those that you will go through, and you'll see that unfortunately, except for the stock ownership, which pervasive and touches everything, you're going to have to do a bunch of slightly different work for each one of them. The other fortunately/unfortunately thing is that usually once you've got the 5471 in place, things are relatively stable because share ownership doesn't change much from year to year in my experience. Anyway, that is the summary of what episode 3 will be all about, the 9 filing requirements. And then finally, let's talk about filing exceptions. This is the preview of episode 4, where really I'm not just talking about filing exceptions. You don't have to file the form at all. But I'm talking about how we can do less work. And there are 3 definitions of less that I have here, one of which is you eliminate the filing requirement entirely. And there are plenty of exceptions that do that. Say, hey, if you satisfy these conditions, you don't have to file Form 5471. Some of them say you have to bolt a statement to the back of your tax return. Some of them don't require that statement. Then there's the situation, this is item H on the front page of Form 5471, where somebody else is going to file Form 5471 give the IRS all of the information they would otherwise want to extract from you, and therefore they're not going to require redundancy and make you file a Form 5471 as well. So, again, you in this case, excuse me, you will attach a form, a statement, but on you go. Finally, there's light filing, right? You have to file, but we're going to ask less information of you. And this is an example, for example, the RevProc 2019-40, where the government acknowledges that there are some instances in which you have a filing requirement, but it's unlikely you're going to get full cooperation from the controlled foreign corporation or from the other shareholders to get the data that you need, and therefore some of the information requirements are waived. So right today, just for this drive-by, I'm just going to talk about the exceptions to filing, but in the full episode 4, we'll talk about joint filing and filing light. Category 1. Again, here's the section, if you've washed out all the section 965 earnings and profits, you've got no problem at all. And I've just quoted here the instructions to Form 5471 to say it says exactly that. So you hope that this is the case for you, because unfortunately, Category 1 is a thing that it doesn't really pay for you to get really, really good at it, because the half-life of value of Category 1 knowledge is decaying fast. So this is the first one I look at always. And then for the other exceptions, and you're going to see this as a common thread throughout all of the exceptions, if there's anything that's going to give you a hall pass, it's probably going to be constructive ownership of stock, meaning you don't have some sort of that economic relationship with the foreign corporation. You're just a shareholder because of constructive ownership rules, typically from family members, and therefore you don't have to, even if technically you are a category whatever filer, you don't have to file because your ownership is constructive. So here's the first example, then you'll see this repeated in the other categories as well. You've got a filing obligation, but the attribution of stock ownership to you is from a U.S. person. And so the idea here is you don't have a direct stock position in this foreign corporation, but you have attribution, and you can see this regulations, the 3 regulations that are cited there that you have to look at. And then the person who has the direct ownership files Form 5471 and reports everything. So what's this? Let's say you own 100% of the stock of a Delaware corporation, Parent Co. Parent Co. owns 100% of the stock of a foreign corporation, subsidiary. You have stock ownership by attribution under these regulations in foreign subsidiary by these regulations. It's indirect, it's not constructive, but you, by attribution from these regs, you are treated as if you're the 100% shareholder of the foreign subsidiary. Well, it's dumb to make you as an individual file a Form 5471 when Parent Co., the Delaware corporation, is going to be doing it and reporting everything there. And so this is the exception. So this is kind of a classic kind of situation. It could be a husband and wife situation, will work equally well there. Constructive ownership from a non-resident alien. So this is another common thread that you're going to see. So if you have a situation where family member owns shares, you are treated as the constructive owner of that family member's shares, but you don't have any economic interest in the foreign corporation. Remember, direct ownership of a share of stock or indirect through a holding structure. You're only constructive owner through a family member, then you don't have to file. Another one, now here you're going to see this for category 1 and category 5 because those are Siamese twins. No U.S. shareholders under Section 958A. Translation into English. you do not have direct ownership of a foreign corporation stock, and you do not have indirect ownership of a foreign corporation stock. Remember, holding company structure. Um, and 958A talks about this holding structure thing where if you look up the holding structure, you are the first US person in that structure. So if you own shares of a foreign parent and the foreign parent owns shares of a foreign subsidiary, you are a Section 958A2 indirect shareholder. Again, more on this in the attribution rules. So you wouldn't qualify. But yeah, so that's the situation. This one is saying there are no U.S. shareholders like that with economic interests in the foreign corporation at all, not just you, but at all. And it's a foreign controlled Section 965 specified foreign corporation, meaning that if you took away what Congress did in 2017 with the attribution rules and now allowing downward attribution, this would be a foreign controlled corporation no matter what. So in that case, they're just saying, this is stupid. You don't have to file. So you're going to be looking at that. So the key thing is no U.S. shareholders at all in this foreign corporation, direct or indirect. And then, so notice 2018-13 came out, as a helpful byproduct of Section 965 and the avalanche it caused. And then RevProc 2019-40 came out with additional help. And this is one where it said, you're a constructive U.S. shareholder. There might be some U.S. people who are direct shareholders or indirect, but you yourself are purely a constructive shareholder. And if you are unrelated to this controlled foreign corporation, then you don't have to file. And I'm not going to talk about the meaning of related, but it refers cross-reference to this code section 954 D3. But basically what they're saying here is a practical matter. You are a constructive shareholder, which means you're some distance from the actual operations of this company, and you're not related to them. So in other words, you don't have such a close relationship with the corporation that informally you could lean on them to get the data out of the CFC to do your 5471, in which case they're saying you don't have to, you've got an exception from filing entirely. And then elsewhere in RevProc 2019-40, they have reduced filing requirements. Category 2, exceptions to filing. Here's an interesting one. For closely held foreign corporations, an officer or director doesn't have to report if after the acquisition you've got 3 or 4 U.S. shareholders that own 95% of the stock. Makes sense because the Category 3 filer is going to be reporting. There's another situation where if a Category 3 shareholder is exempt from reporting, then the U.S. officer or director doesn't have to report either. So again, more details later. Category 3, exception to filing. We got 1. Constructive ownership. You don't have direct ownership of stock. You're a constructive owner because of the attribution rules from a United States person. And the U.S. person files as a Category 3 filer. Note what that means is if you are a constructive stockholder for Category 3 purposes and the attribution is from a non-resident alien, you got to file. Category 4, exceptions to filing. Again, we've got this no direct ownership and the real controlling shareholder files. So you've got a U.S. person that's reporting all of the information for this transaction. You're a Category 3 person. That other person's a Category 3 person. They file. You don't have direct ownership in the foreign corporation. You're cool. You don't have to do a Category 3 filing. Constructive ownership from a non-resident alien. We saw that before. You just have no indirect ownership, right? No economic possibility of profit out of this thing. It's just because you happen to be related to the person who did the acquisition that you got a filing requirement. Category 5, and category one for that matter too, because they both use the same rule set. No direct ownership, and the real controlling shareholder files Form 5471. We've seen that before. You do not have direct or indirect stock ownership in the foreign corporation. You have attribution from a non-resident alien, therefore you don't have to file at all. This is the Notice 2018-13 exemption from filing, where there are no U.S. direct or indirect U.S. shareholders. Therefore, there's no possibility of income being flown upstream, subpart F income, blah, 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 to a U.S. shareholder into gross income. Therefore, what's the point? And this is waived. No Form 5471 Category 5 filing. And then, again, this is you do not have direct or indirect share ownership. Somebody else who was a U.S. person might. But as long as you're not, quotes, related, close quotes, to this controlled foreign corporation. Don't you love that? And that's actually a defined term in the notice. Then you don't have a filing requirement. So the summary of the filing requirements. There are some other filing exceptions. What if you make a treaty claim to be non-resident alien? In that case, you have a light filing requirement. In some cases, you can just file some audited financial statements instead of doing the 5471 or some schedules, stuff like that. But we'll go into that more in the future episodes. So everything, again, turns on stock ownership. So everything, that's the seed you have to plant. And from that, all of your information will come that will help you decide what category, what exceptions will apply to you. So here we are, just a tad over a minute. My apologies. We'll finish at a minute one. Thanks for being here. My email address is on the next slide, phil@hodgen.com. Shoot me emails if there are some things that you need to have addressed in future episodes, things that just bug the hell out of you for Form 5471. I'll see what I can work into the future episodes and the discussions. If you think I went over something too fast and I need to expand on that, let me know, because this will develop and get bigger, and I want to know what to fill in next time. And finally, go have a happy Friday, and I will see you next month for episode 2. Again, email me. Ask me questions. Bye.